I think a Chinese equity bull market is starting. Foreigners are just waking up to it. Domestic investors are just waking up to it. We're in the process of mending that confidence. And so I actually think that the government's 5% target is achievable. I am optimistic on China. Again, I think it's the most competitive economy in the world. I think that's a fact. It's not an opinion.
A Chinese stock market bull run has started, with both foreign and domestic investors just realizing it. Confidence is being rebuilt, and the government's 5% growth target is achievable. China remains the most competitive global economy. 112 to 248. China's global dominance in industries. China dominates industries such as automobiles, robotics, power plants, solar panels, and batteries. Despite negative sentiment, Chinese markets are recovering, climbing a wall of worry. The biggest challenge is restoring confidence among investors. Trade surplus and capital flow. China has a record-high trade surplus, $90 billion/month. Domestic wealth holders are hesitant to reinvest due to low confidence, leading to capital outflows. The Chinese government is working to rebuild confidence to redirect capital into the economy. Western misconceptions about China. Many Westerners haven't visited China recently, missing its rapid transformation. Outdated prejudices persist, assuming China produces only low-quality goods. China has surpassed expectations in technology, infrastructure, and innovation. Creativity and competition in China. A Western bias exists that China lacks creativity, but its industries prove otherwise. Fierce competition drives innovation, making Chinese firms globally dominant. Unlike Western monopolies, China has multiple competing firms in each sector. Capitalism, the Hunger Games style. China's capitalist model involves intense local competition, rather than monopoly-driven growth. The government supports industries by encouraging banks to fund startups, creating a survival of the fittest market. The result is lower prices and better products for consumers. Infrastructure development as a growth driver. Unlike Western economies, China invests heavily in infrastructure, enabling economic progress. This overinvestment helps sustain long-term growth despite short-term inefficiencies. AI and semiconductor race. China has caught up rapidly in AI development, but still lags in semiconductors. Heavy investments in chip production indicate a strong push to close the gap. Investment opportunity in Chinese equities. Chinese stocks remain undervalued, but have strong government backing. Low bond yields and high dividend yields make equities attractive. Positive momentum signals long-term growth potential. Final thoughts. China is the world's most competitive economy. Despite skepticism, current market conditions present a strong investment case. Western investors risk missing out on China's resurgence.
It is the start of an important bull market in China. I think we're going through a very, very important shift in narrative, both amongst domestic investors and foreign investors when looking at Chinese equities. Now, China essentially dominates every industry in the world, even at the very pinnacle of technology. I think this is why DeepSeek matters. DeepSeek shows that even at the very top of technology, China can compete with the West or even go above the West. And so this gives a lot of comfort to the leadership. It's like all of a sudden, the fears that China's growth could be contained by a Western blockade are essentially gone. And so now we're entering into a new phase where the leadership keeps talking about boosting domestic consumption, about boosting the domestic consumer. And if you want to do that, the simplest way to boost confidence, because what China suffers from is a lack of confidence. One way to boost confidence is to get a stock market bull market going. And I think that started last in basically February 2024. So it's a little over a year's old now. And for a year, Chinese stocks have been moving higher. I think a Chinese equity bull market is starting. Foreigners are just waking up to it. Domestic investors are just waking up to it. Flows are starting to pick up, but it's just the beginning of a story that should last many years. I'm sure you've heard this saying that bull markets climb a wall of worry. That's what bull markets do. You have all these concerns, and the bull markets just drive through them. And I think that today you're seeing this. It's very typical behavior where everybody focuses on the negative because we've had 3-4 years of really bad stock market. So everybody focused on negatives, like, oh, this isn't going to last. Oh, real estate, bad news. Oh, confidence is so bad, etc. But the markets just continue to move ahead. It's very, very typical of how bull markets evolve. When you have to be worried about the bull market is when everybody thinks it's going to keep going higher. When everybody says, oh, sunshine every day, ice cream for breakfast, when everything is awesome, that's when you have to worry about the bull markets. And in China, to your point, we're not there. Now, there's no doubt that the Chinese economy's had basically 5, 6 really rough years. Some of that was self-inflicted. To be honest, the COVID lockdowns lasted for too long and really shook people's confidence. Now, the reality, though, remains that if you take a step back, China's economy today is by far the most competitive economy in the world. And you see this through Chinese trade numbers. China's trade surplus keeps on making new highs every single month. China's trade surplus right now is about 90 billion a month, US dollars. No country has ever run a trade surplus this big. And it's a real testimony to how competitive Chinese businesses are. And you take any field, you take automobiles, you take industrial robots, you take train building, power plant building, solar panels, batteries, you name it, China's at the top of the global game today. And to the point where very few can compete. When you start off with that, like what should be happening is all the people making money selling solar panels, selling batteries, selling all the things that China's selling. They should be taking that money and reinvesting it at home or consuming. But because their confidence has been crushed, because people are so afraid, they just do one of 3 things with it. They either take that money and leave it at the bank, and the banks, because there's no demand for credit, the banks have nothing to do but buy bonds, and bond yields go to new lows, option 1. Option 2, they buy gold. And then the third thing they do, if they can, is they keep that money abroad. So you look at Hong Kong, US dollar bank deposits in Hong Kong have grown by $250 billion over the past couple of years. It's just enormous amounts of money. Now, if the Chinese government manages to boost people's confidence, both the businesses and the individuals, the money is there and the money keeps coming in, 90 billion a month. So I think we're in the process of mending that confidence. And so I actually think that the government's 5% target is achievable. So really, very few people have traveled in China in the past 5 years, which is crazy because it's obviously the second biggest economy in the world. And it's still growing, decently. Just walking around the streets, there's so many car brands that didn't exist 5 years ago, 10 years ago, producing really high quality cars and at very, very affordable price points. So the Western world has completely missed out on this story. I keep saying, look, you have to go see China. You can't underestimate how much it has changed in 5 years on so many different fronts, because it's not just the manufacturing, it's also the fintech. I wrote this piece about a year ago now called, Prejudice in China. People are holding on to past prejudices. They might have gone to China 10 years ago, 15 years ago. And back then, China was an economy that essentially produced cheap goods cheaply. It's like it was, China quality was seen as inferior. For a lot of people, if you haven't been to China in the past 5 years, that's what they're still stuck with. It's a frame of reference that has been bypassed. The assumption I think most Westerners have is it's communist, therefore it's going to fail because all the other communist countries have failed. Now, I always say, well, look, the interesting thing today about China is the CCP has been in power longer than the Soviet Union existed. China doesn't feel like it's collapsing at all. You're getting better trains, you're getting, less pollution, you're getting airports being built everywhere. China now is even producing its own plane. China's sending missions to the dark side of the moon. So I think there's communist element is a big part of that bias. I do tend to believe as well that, look, in the Western world, we have this conception that people from Asia can't be creative, that it's almost like we have a monopoly on creativity. We're always surprised when Asians do better. And so I think we have this tendency to always underestimate the resiliency and the hard work, frankly, of Asians. And, today, it's amazing. I was being interviewed by an American TV channel. And one of the first questions they asked was, Yeah, but there's no creativity in China. I said, how'd you figure? Like, they're producing better cars, they're producing better movies. Like, go see Ninja 2. It's like it's the world's highest grossing cartoon. But people hold on to these prejudices long after they're proving to be not true. You can't understand the Chinese progress, the economic progress, the growth that you've seen, etc., if you don't understand the level of competition that most Chinese businesses have to deal with. To be a successful businessman in China means that you're going through just insane levels of competition. And if you don't run twice as fast as the next guy, you're not going to win. If you look at the US, it's like, okay, they decide to do electric cars. So essentially, they tell Ford, GM, and Tesla, we'll give you big subsidies to do electric cars. And then GM and Ford fail and Tesla succeeds. And the end result is you get Teslas for 70,000 US dollars, and Elon Musk gets to be worth $100 billion or whatever the number is. In China, capitalism works differently. In China, okay, you know what? We need to produce electric cars. And then what happens is that every local party secretary, every mayor, every provincial governor says, I'm going to call my bank and I'm going to say, hey, Agricultural Bank of China, I've got a local car producer here. You need to give him loans so he can start producing electric cars.